class so that they can have something to reckon on. So, as each slide, I'm going to be asking us different questions, and also there might be a reason for me to be splitting from a screen to another screen, just to make sure that we get the best when it comes to this class this evening. So, I made mention to us yesterday, and I said that where I'm going to start this evening is choosing your investment vehicle. Now, we all know that, let me break it down like this. I'm a person that deal with personal finance, so I should broaden your understanding in some scope. Now, when we are talking about a vehicle, when it comes to personal finance or a vehicle that leads to wealth or prosperity, we might be talking from different angles. One of the vehicle you can use stock market as an example. I mean money market as an example. You can use what we call real estate. Yes, you can use real estate. You can use business. You can use trading, right? Yeah. So these are the vehicles when it comes to levels that lead you to wealth and prosperity. Yes, and we've seen that working in the life of people over time. But now, when it comes to stock market, what are the vehicles that we have in these investments that we are talking about? So it is very important for you to know the different stocks that we have in Nigerian stock market. It is very important to know their necessity, and it's very important to know what they are up to. It is very important to know that each of these stock, they are not just there. Every figure you are seeing down there, they have their own interpretation which guide you as an investor in making your best decision as at when you. So, firstly, I'm going to start from a stock that is called blue chip stock. Pardon my grammar. Pardon the way I'm going to be talking, but I want to believe that I'm talking to an intelligent people, passionate about their finances, and also making sure that all what it takes, they are giving it to it when it comes to knowledge gap. So, and that is the reason why I want to make sure that I'm saying some things out of what you might not really have uh, what's it called, holistic understanding about. But believe me, follow me. I'm going to make it in a way that even a baby can comprehend. Like I made mention that, oh, so like I made mention that blue chip company. When we are talking about a stock that is blue chip, what does that mean? Don't worry, I'm not going to ask you. I'm going to define it myself. So, you have to know, and there are some things you have to look up to if a stock can be a blue chip stock. These are shares of a large financial companies with a long track record. I hope you are taking note of that. I will repeat myself. These are shares of a large financial stable companies with a long track record of strong performance. They are usually have what we call large cap, which is called large capitalization. Now, I know that English might be too big, but let me explain. When we are talking about this stock, what is the first thing you will have to notice about this company is that, one, they are big company. First thing you have to notice about them is that they are big company. And are we talking about the size of that company? Are we talking about the size? The answer is yes or no. Because the size of a company might not really give us the what's it called, the overall information that we need. Now, let me use this as an example. Most of us, let me even say 70% of us that are on this call currently use either OPay, PAMPay, right? But when you have to learns all this bank in the sense of the size of their company, right? You will think that they are small company. You know why? Because currently, even in I'm currently in Lagos, Nigeria. You will, I think they have just only 2 branches in Lagos, Nigeria. You see that they have just only 2 branches, but does that now classify them as a small company? Though we can still say they are small company, but that doesn't classify them as a small company. So when we are now talking about a company is big, what are we talking about? We are talking about figures. We are talking about numbers. So it is the figures that tell us, that give us information whether that company is big, small, or large. So, and based on the definition I gave, I said that these are shares of large financial stable companies. So another thing is not only that the company is big. The second thing is that, are they stable? Is the company stable? So because these are the things you have to look up to. What is their record over time? And I'm going to be citing an example now. One, when we are classifying a company as being big and have a stable financial numbers, one of the company you might be thinking of is one. Even if you want to think of 100, the number one company, what will comes to your mind? One is Dangote company. Yes, Dangote company, these are one of the company that over time you can, if someone meets you and said, did you know about Dangote company? You don't, in as much you are in Africa, you must know Dangote. In as much you are in Africa, you must know Dangote. Even if you are not in Africa, you must have heard about someone called Dangote company. So definitely this company is big, but did they have a stable financial record? The answer is yes, because based on the volume of the things they are doing, it has been proven over time that this company is stable. But does that alone categorize Dangote company as being a blue chip stock? I'm going to be showing us after giving the what's it called, after giving us the breakdown of each stock. I'm still going to go back to what we call the Nigerian Stock Exchange and show us how you can really picture if a company is blue chip company. And when we are talking about blue chip company, what are the things that it entails? How can you make leverage of this as an investor? The thing is that when we say a company is stable, what does that mean? It means for you as an investor that you can invest in this company and go to bed and sleep well. Because why? They have proven themselves over time for stability. They have big market cap, which means market capitalization. That means one of the things you can do as an investor is that you can invest to this company based on what we call a long-term investment. See, if you put your money in this kind of company that is categorized under this, one of the things is that you have a hope for future. Like now, most of us, if you are planning to invest in a long-term business, in a long-term stock, you have to take that, is this company I want to invest into, are they categorized under this? Because if you don't, let's assume that a company that doesn't even have a record. Let me mention a company. There's a company called TIP. If I mention that company, I know most of us doesn't know the company. Most of us. But as soon as I mention maybe Boa Cement, most of us know who Boa Cement is. That alone, because the company is big, they are stable. So you can invest in that kind of company and go and sleep. And one of the things, the advantages of it is that you can rely on them. Your money cannot just go haywire. That means when it comes to risk assessment, they are a low risk company, which means that you can go to your bed at any time and sleep, because when it comes to risk assessment, they are very low. You can't hear tomorrow that Dangote crash and Dangote is not in the country again. So risk assessment, yes, their risk are very low. But another thing here to me that categorized as a disadvantage is that what is their potential growth? Their pot their potential growth is uh let me say 10, let me just say 20 to 80. That means in times of growth is 20. Yes. Why will I say it is 20? Before a company can be categorized under this platform, that means they have attained the level of growth. I'm not good in science very well, but I know that when you attain a certain level of growth, you won't grow again. Am I making sense for doctors or people that knows about this thing in the group? When you attain some stages in life, when it comes to growth, no matter how you eat beans, you can't grow again. That's just a simple thing. You can't grow again. So the same thing applicable here. So one of the things is that the company can still grow, but you can't compare it to the company that are just growing, because here they've attained the level of growth that it is visible for everybody to see. So in time of low risk, yes, they are low risk. You can invest in them and go and sleep. In times of what's it called, growth, they are 20%. And three is that when it comes to dividend, yes, they are known for dividend. Yes, most of this company, because of the large volume of transactions, because of the market capitalization, because of the volume of the things they are doing, they are well known to they are well known for paying their investor what we call dividend. Yesterday, I make some illustration. I explained what dividend is to an investor. So that means if you are looking for a company that pays dividend, then be looking for this kind of company. So if you are looking for a company that you can invest in it and go and sleep, so that means this is where you belong. So if you are looking for a company that you just feel like, oh, I don't really need what we call what's it called, investment appreciation or capital appreciation, you can invest in this company. I hope I make myself clear. Yes. So moving on, this is another vehicle. Like I said, we are treating this topic, investment vehicle in Nigerian stock market. Now, the second thing that you have to take note is a company that a stock that is being categorized as a growth stock. This one is a little bit tricky, and but I'm going to explain, like I always say, in a way that even a baby can comprehend. When we are saying that a stock is growth stock, what do we mean by that? Now, when a stock is categorized under growth, it means that, excuse me, the stock belongs to, they are currently expanding rapidly. You see that they're expected to outperform the market in the future. That means one of the things you will take note is that the company, they are just, they are thriving towards expansion, towards growth. And one of it is this current bank that is trending now. For those of us that read financials or that follows news, there's a company called GS Bank. You can see, for those of us that follow the market, you can see the level of the growth that this company have done this year. That is what we are talking about. That kind of company, they are being categorized as a growth company. You know why? Because they are expected to be growing rapidly. Yeah, if they make a revenue of 250 trillion this year, they are not expected to make the same revenue next year. They are expected to do above that next year. And how can you get that? You can get that from their financials, which I'm still going to show you, right? So what is the, there's no, this is the word of advantages, merit and demerit, right? So when you are now talking about this kind of stock, now what is their advantage to you as an investor? One of it is that there's what we call what's it called, investment investment I don't investment appreciation. Don't mind this my stuff. Investment appreciation. What is investment appreciation means? Let assume that you get, this is Samin PLC, or let me use Sam PLC as an example. Now, when you are buying into my company, you buy at the rate of 1 naira. You buy at the rate of 1 naira. Yes, right? That should be when you are buying, let's say December 2025. You buy at the rate of 1 naira in December 2025. But currently, let's now assume that in February 2026, this stock has increased to what we called, let's assume 5 naira. What happens here is that there is a difference of 4 naira. So this difference here is what we call investment appreciation. This means that you as an investor that is investing in growth stock, you are open up to a rapid increase in capital appreciation. Yes, or you can call this capital appreciation. You see that? So if you are investing in this kind of company, you know why? Because they are known for they are known to be expanding. So you can't really predict the level at which they can go. So, and why people tend to invest in a company, because when they see growth of a company, people tend to invest in that kind of company. So if you buy, definitely there is an assurance for you enjoying what we call capital appreciation. One advantages. But let me tell you again, the disadvantages again. This stock also, some of them, they are still well known for dividend payments, though it's not all. It is not all, because as at this stage they are making profit, but they are reinvesting their money. So it is 50-50. It is 50-50. So they might pay dividend, they might not pay dividend. So if you are investing, you can check their dividend history. If they have paid dividend before or they have not paid. If you are a type of person that is passionate about paying dividend to an investor, you can check if that company is paying dividend. And most of the reason why they decide not to be paying dividend for those of them that doesn't pay is because the profit they are making, they are reinvesting it. And that is, I explained what the what's it called, retained earning means to a company yesterday. So that means that they reinvest the profit at which they are making in order to make a growth and be categorized to this company. Now, to the side of disadvantage, what is their disadvantage? Their disadvantage is that most of them, they are high risk. Let's say not really high risk, but they are in terms of medium. They are medium risk. That means that if you invest, these are the stock you will invest to. You have to be checking your portfolio every day. Unlike blue chip company stocks, I mean, you can invest in this one and 3 years, 5 years, you still be shaking your head and say, oh, I invest. Oh. But you see this, most of them, you have to be checking your portfolio time in, time out, because as they have the potential for growing, also they have potential for what? For coming down. So they can grow and also they might not grow. So it's 50-50, like I've explained. So when it comes to their risk level or risk assessment, they are also medium. Unlike the blue chip stock, which their risk level is low. Ha. So let me still think of any. Can I still think of any? What's it called? For now, let's leave it that way until we get to the stock, the Nigerian stock, so that I can explain more better. So here, I think I won't need more explanation to this because I've been explaining this word since yesterday. I can't count time. I've explained this word. Dividend stock. I'm happy to explain this again. When we are talking about a dividend stock, these are stock that they are well known for paying dividend. No matter how the company, is, they must pay dividend. Example, I think is this Senate Bank? Is this Senate Bank? I don't know. No. Is this Senate? Either Senate, yes, either Senate pay, I think twice dividend in a year. So if you're a type of person that is passionate about paying dividend to an investor, definitely this is the kind of company that you are aimed of investing into. Because why? They are well known. They are well known for paying dividend to their investors. What is dividend? I repeat it again. Dividend happens as a result of compensating their investor for investing in a particular stock. I hope that is well understood. The answer is yes. I'm getting a notification here that we have 15 more minutes. So the second link has been sent to you, so you can just join as soon as this call ends. So, but before it ends, I will try as much as possible to explain this penny stock. You see this penny stock, these are small as, it's just the opposite of this. The opposite of this company, of this stock. So when I'm saying that this company is big, that means this one is small. So when I'm saying that this company, they are low risk assessment, then that means this one is high risk. When I'm saying that they pay dividend, that means this no dividend. No dividend at all. So, but there is nothing that has a disadvantages without having an advantages. Yes, one of the things you can enjoy if God, no, it's not, this is not even God a thing. This is about you knowing the psychology of investment. See, there are a lot of things you will learn in this class that even if you pay, you might not get it. If you do your diligence very well, this company can make you a millionaire overnight. This kind of stock can change anything about you overnight if every diligence is being taken. And also, as they can make you a millionaire overnight, they can, they can reduce the value of your life overnight. You can sleep as a millionaire now and wake up as a nairaneer in the following morning because a stock that is trading at 10 naira now, the following morning or the 2 days after can be trading at 1 naira. Imagine you buy like 10, let's say 2, you just use like 2 million naira to buy this. So the value of your money, you are a millionaire as at the time you are buying, but as at the time that you realize or your eyes is open, you're already a thousandaire. So they are very, very high risk, very, very high risk. But for those that there is something called risk appetite. So for those that their risk appetite are high, you can go for this. But that means if you are ready to lose your money. Now, let me now associate everything into a real life thing. As an investor, your head must be calculating what makes me or what will makes me to invest in these 3 or 4 categories. One, I made mention of it yesterday, is your age, sir. I mean, your age. If age is not on your side, definitely your risk appetite should not be high. So you should not be aiming for this. You are already in your 50. You're already in your 50 years and you are going for this. You are already in trouble. Because now, as at this age, what you are aiming for should be a dividend company or a company that is blue chip. So age can determine the kind of investment that you are going for. As someone that you are just maybe 25, 20 years of age. So yes, you are still young. Even if you lose all, there is still a chance for you to gain back. So definitely you can go for this. So if your age determines the kind of investment that you are to go for. If your age is not on your side, and you know I told you yesterday that the level at which you run determines what is pursuing you. If a cat is pursuing you now, the way you are going to be running will be different from if a lion is pursuing you. So it's a different thing. If age is not on your side, believe me, trust me, take this as anything from me. Don't ever go into high risk investment because you can give yourself high blood pressure. So if you are around 50, depends on your risk appetite. What you should be aiming for is a retirement plan. And in a retirement plan is dividend stock categorized because you can sleep well and wake well. But his age, like I don't want to say someone like us now, we still have time. Time still dey. So we can lose it and say, oh no wahala, we still get it back. You get it? And I know some of us are very aged. We are very tender when it comes to our age. Please, if your age is still tender, don't go and be sleeping here. Though it's good to save your money, I'm not disputing that. But do your diligence. There is money. Don't ever make those silly talk that you see there's no money in this nation. Oga, there is money in this nation. I'm telling you, it is just that you have not known how to make it. So, going to the next slide is just the summarized things that I've explained. The stock strategies is that when you are investing in blue chip company, like I said, that when it comes to the risk profile, they are low risk. They are low to moderate. Profit potential, steady and reliable. When it comes to the primary objective, long-term stability, which I explained, and portfolio safety, yes, you can go and sleep and be taking Hollandia. You see that? So when it comes to growth company, what are the things that entails is that they are moderate in terms of risk assessment, is that they are high risk capital appreciation, which I've explained, aggressive portfolio. You know why? Because of the expansion over time. When we are talking about dividend, yes, they are moderate because for a company to be paying well dividend, that means they must be categorized under this also, or this most time. So they are moderate and also they are categorized as passive income. Yes, because as much hey, there is a joy. There is a joy. I was explaining something to one of my she's someone I truly respect so much in my office, and I was explaining for her the opportunity when it comes to FG and savings bond. I said, did you know there was a day I was having some high do money. Then I put that money into FGN savings bond, and I was stranded one day. I was literally stranded that day, and I was just thinking, oh my God, how will I get? Who will I call? What will I do? Lo and behold, I slept and I wake up. There is a joy that you just see a credit alert. You open your phone, the first thing you are seeing is credit alert. Yes, most of us, federal government pay us every month. I can boldly tell it. I can say it anyway. And there's no magic to it. So, is one dividend company are most of the passive income that you can see out there. So, they generate regular, predictable cash flow. Yeah. So, penny stock, I've explained that they are very high risk. Speculative to massive. You see, most of the people go for this because of their age. I've explained that. High risk, high reward. They are also in emerging company. That means they are still growing. They are not yet grew, but they have potential of coming to this place. You see that? So we have 6 minutes before we go to the next chapter of showing you how you can know this thing in a real life scenario. This is just theory that we have been told in the class, but in practical terms, how will you know all these things? So let me entertain questions before we move to that. So if there's any question, please, you can raise up your hand and let me entertain question. Thank you. Esther Yakub, please, you can go ahead. You're welcome. Okay. Hmm. I like that question. I will say that you can't necessarily classified a dividend stock to a blue chip stock. And I will say this. Are you hearing me clearly? Because I'm quite far from my mic. Okay. The reason for that is because one, when we are talking about dividend stock, that means they are well known regularly. They will pay dividends. Some of them even pay twice a year. But when we are talking about blue chip company, some of them doesn't pay. Some of them doesn't pay. Yes. And you can even check from their history that it's not all of them that pay every time. They might be paying, but they might not pay all the time. But when we are talking about dividend stock, in fact, some of them are not categorized as only blue chip. There are some stock that they are categorized under growth stock, and they pay dividend time in time out. They pay dividend regularly, but they are still a growth, and there is a reason for that why we classify them as a growth company, which I'm still going to show you. But a blue chip company is like I've explained that they are stable and then you can invest and go and stay. But some of them doesn't mean that they pay dividend regularly. Some just pay this year, they might not pay next year, 2 years, they might not pay as. You see that? And when it comes to dividend, stock, they are well known for that. Regardless of what happens, whether they are in blue chip or they are in growth or they are in penny, people know that this company they pay dividend, no, regardless of what is happening in the company. Have I answered the question? Have I answered your question? Is it clear enough now?